Hello and welcome to Money Mind. In this video we will discuss about the planning part in IDBP3. So why planning is important? See, planning is important in a lot of different avenues. You need to plan for your taxes, you need to plan your expenses, that is budgeting. You need to plan for your investments, that is investment planning. I'll discuss all of them here and I'll let you know why each of them are very important for you. So stay tuned. Mainly four types of tax planning. One is permissive, one is purposive, there is a short-term tax planning, and there is a long-term tax planning. So permissive tax planning says, it's a tax planning that is permitted for your country. If you are in India, you cannot do a tax planning for USA or maybe UK or any other country. This is permissive. You're permitted to do a tax planning for India. Purposive, you channelize your investments and business to other countries so that you can save taxes. Short-term tax planning is carried out at the end of the financial year. This is generally done to squeeze out every opportunity to try and find out if there is a way to save taxes. It's not recommended. I always recommend you do plan your taxes well. There is no hurry at the last moment. So that's where the long-term tax planning comes into picture, wherein you have a goal in your mind and you invest accordingly and you plan your taxes accordingly. So that's a long-term goal. It's a long-term tax planning. So what are the checklists? So checklist number 1, involve your spouse. If you have a joint home loan, take a joint home loan, involve your spouse. If it's huge, you get a rebate of up to, I think, 2 lakhs on the home loan interest. So if you're paying an interest of around 3 lakh, 4 lakh, and if you have a joint home loan, you can split that and show 50-50 in 2 different accounts and take a benefit of 4 lakhs out of it. Checklist number 2, have your investments divided among every family members to claim tax rebates. That's also one way. Checklist number 3, if you're eligible, open up a HUF or maybe a trust or something, whatever suits you. Have a word with your lawyer, have a word with your CA, they'll explain you better. I have an HUF, I have a trust running, I have investments in my HUF, I have investments in my trust. That helps save a lot of taxes under these entities. So again, checklist number 4, max out your investments in EEE, as I said earlier in the last video. So that tells you why it's important, because that gives you tax exemption returns. Checklist number 5, avail all the sections if possible that the government has given you for tax deduction. So be it Mediclaim, be it ATC, ATD, the donation section, whatever the section names are. So try and get the maximum out of it, whatever you can. So this is about tax planning, and the next comes is tax harvesting. This is also a part of tax planning, but the concept is a little different. You need to channelize your investments and move your investments every year to take advantage of the benefit that the government has given on a long-term capital gain. Now comes budgeting. This is the most important part in your wealth journey and in your planning journey. The reason why budgeting is important is because if you do not do it, you will spend your money and you would not notice where it has gone. You will have no clue absolutely whatsoever. So budgeting is very, very important. The simplest definition of budgeting is the process of creating a plan to spend and invest money. That's it. That is the simplest definition that I can think of. Have a plan to spend, have a plan to invest. That's what budgeting is all about. So if you have a plan to spend, if you have a plan to invest, your budgeting is done. How to do it? Let's see. So step 1, determine your income, how much you earn. If you're a salaried person, you know how much you earn. If you're a businessman, your earnings are fluctuating, so you don't know how much you earn, but I would say take the minimum amount that you have earned in the last 1.5 years. So take that and do the budget. Step 2 is determine your expenses. What are your expenses? Step 3, choose the budget plan. Include every expense that you have or that you're going to incur in that year, even the expenses that comes annually. If you have a yearly annual expense, something like the Mediclaim, break that down. So you know that's going to cost you like 20, 30, 50,000 or maybe 1 lakh a year, 1 lakh rupees. Break that down by 12, that's 8,000 a month. Put that into budget and plan it. So once you have a budget, you will find yourself cash trapped. So it's at this point of time you will have to adjust your habits. If you do not have an exorbitant income that you can keep everything in place and still have a budget, that's well and good. Otherwise, if you have a limited income, you are going to have to see yourself cutting down your plans and cutting corners a little bit. Live the plan. So you have determined that you're going to budget, you have figured out your income, you have figured out your expenses, you have a budget plan in place, and you have to live the plan. That's it. As simple as that. Now my favorite checklist. Checklist number 1, budget to zero every month. Why is it required? It's required because you have this much money coming in, this much money going out. It's going out as an expense and it's also going out as your investment. So coming in minus going out should be 0 for every month. If your coming in is 10, if you're going out on expenses is 8, 2 should go out in your investments. Okay. Checklist number 2, do the budgeting together. Husband, wife, couples, parents, family. The entire family should sit together and do the budgeting for the family. Okay. All expenses, who is going to contribute where and how much, all these things should come. The entire family income should come into the budget, and what's going to come out from that pile of money, it's going to be the budget for the family. Checklist number 3, as I said, if you have any one-time expenditures coming up in future, maybe your child's education or maybe your child's college or whatever it is, put that into budget and break it down into monthly installments. Checklist 4, paying off your debt is also a part of the budget. So your expenditure, the debt management plan that I have spoken about in the D of IDBP3, wherein I said you have to channelize, you have to put a little extra money to the debts that you have to bring it down. So that little extra money, you have to show it in the budget, saying that this is the extra money that I'm putting for my debt management. Checklist number 5, be ready to trim your budget. Once you do a budget, you might find that you're falling short of money here and there. This might happen in the initial stages of you budgeting. No problem with it. Just trim, try and squeeze out money from other places, your enjoyment fund, your relaxation fund, and put them in the budget, or maybe cut down your expenses. If you're finding it difficult to make it a 0 at the end, if it's going into negative, try and find out what expenses you can cut down. Do not cut down your investments, cut down on your expenses. Checklist number 6, track your progress, how you're doing, how you're budgeting, how you're building your wealth. Track everything. Checklist number 7, remember you should put a little more money into your emergency fund every month whenever you get a hike. That should also be a part of the budget. Do not forget that. Okay, it's just a reminder. Checklist number 8. If you tend to overspend on something, say maybe on groceries, maybe on food items, if you're overspending, do not use your card. Use cash for that. Make cash payments. Keep an envelope, put cash in it. On top of that, write groceries. So you know, for groceries you have this much. That's all for the month. This way, once you finish this, you will not have anything else to buy. Okay, try and do this. Checklist number 9. Do not compare yourself with others. Run at your own pace. Do not run with others. Checklist number 10. Do not quit budgeting. This is very important because for the first 2-3 months, it would make you feel that nothing is happening. You are not able to do the budget. You cannot just make it. Do not quit. Carry on, persist. I have seen people have taken a year, 12 months, 15 months to finally come to a place where they now have a very good budget for themselves. After 15, 16, 18 months, I've seen people spend 18 months figuring out how to budget their expenses. 18, that's 1.5 years. So don't quit. Checklist number 11. This is very important, and this is something which every one of you should be doing it. If you're in India, if you're watching this from any other country, I'm not sure if you know what your banking laws allows you to do, but you should have different checking accounts for different things. Do not keep all the money in one basket. It's a thumb rule for investors. It's a thumb rule for anybody who is handling finances. So it's a thumb rule here as well. Do not put your budget money in one account. Have different checking accounts. What does this mean? You can put your investment money in the investment account. You should have a separate investment account altogether. As soon as your salary comes in, you know how much you have to put in, transfer that. You know how much is your grocery bill, transfer that to a different account. How much is your electricity bill, transfer that to a different account. Put the money in, forget it. So when the bill comes in, check into that account and pay it off. That's how you should do a budgeting. If you put all of your money in one account, you're going to mess it up. Absolutely, you're going to mess it up. So have different accounts. Keep those debit card for those accounts safe in a locker. Forget the PIN, whatever it is. Just have the internet banking active, or maybe you have the mobile app. That's all you need. And the final checklist which is number 12. Do not rely on uncertain amounts of money coming in and putting that money into budget. Why this is important is because the money is uncertain. You don't know what's going to come in. So how can you put that in a budget? You cannot. Now, coming to the last part of the planning, the P1 of IDBP3 is investment planning. Investment planning is a part of wealth building though, but I would say it's still a mind game. So until and unless you understand why you are investing, what is the importance of investing, you will not be playing the investment game nicely. So investing is a journey. Just as you prepare for every journey, you have to prepare for this journey as well, the investment journey. So it demands a lot of thinking, it demands a lot of patience, it demands a lot of study, knowledge, information, and then actually working everything that you have acquired, the knowledge, the information, the study, and putting them in effort to bring out the wonderful portfolio that you finally make out of all those investments that you have made. So to do that, you need to have a different mindset. So have a different mindset. If you do not have it, develop that. I have a video on that, how you can develop the mindset to wealth, or how you can channelize or maybe build a neuro connection which will focus your thoughts in the investment direction. have a look at it. I'll give the link in the description. You can check that out. That is the ultimate plan that you can start off with for your planning journey. If you follow what I say in all these all these videos on IDBP3, and if you follow it diligently, rigorously, religiously, you will win with money 100% of the time. Okay, till then, see you. It was nice talking to you. Have a nice day. SG signing off. Goodbye.